Hello, learners. Again, welcome to our session, a continuation of what we were doing earlier on, right? Recalling our last class, we had handled up to aspect to do with appropriation account. In our class today, I want us to handle the current account because I believe that was also part of the requirement in this question of ours, where we were told to prepare our current account. We are also asked to prepare the partner's current account. So it will be very vital that we also look at it. It will also be very vital that we also look at our current account. So therefore, having mentioning that, let us prepare our current account. So we just allow Mwalimu to erase this side so that it would give us a space to work it out. I'll just erase this point of mine because we have all this data. So allow Mwalimu to erase this side. So therefore I'll be having it at this point. Current account. Once you have the format for current account, you know things will be very, very easy on our side. And therefore proceed to our current account. I'm having these individuals, the partner's current account, which in this case I'm having Lily. We do have Amanda and Ken. We do have Amanda and Ken. Amanda and Ken, current account. Current account for the year ended. Current account for the year ended, of course, 31st December 2021. So having our current account, we need to prepare it very as it's supposed to be prepared. So therefore, of course, I'll be having our details here. I'll be having our details at that point. First of all, let me remove this question because we won't need it now. So I'm having our details. I'm having our individual Lily, Amanda, and Ken. Lily, Amanda, and Ken. I'm having our details here. Lily, Amanda, and Ken. So I'll have to squeeze interest on drawings, just mark it. And Ken. So having our data there. All through. So that is what we have being our current account. So our current account, again, it will be very important that we recall the format of this current account. It will be very, very ideal that we should always recall the format of our current account. So therefore, I'm going to have a balance brought down. Balance brought down for our current accounts. Balance brought down, what were we given? We go to our current account and see what you were given. So if you can check our current accounts, I'm having Lily, Amanda. Ken did not have any current account. Ken did not have any balance in the current account. So therefore, we should be talking of these individuals. I'm having Lily, 8,000. I'm having 8,200. So Lily, 8,000. Remember our figures here are in thousands, my good students. Our figures here are in thousands. We should not forget that. Our figures here are in thousands. Our figures here are in thousands. So balance brought down for Lily, I'm having 8,200. For Amanda, I'm having a figure of 2,400. Then this other individual, Ken, we did not have. Consider items to be recorded on the credit side of our current account and items to be recorded on the debit side. So on this other side, I should also record any salaries to the partners. Salaries to partners, we only had one. Lily, 60,000. So Lily was the one who was earning a salary of 60,000. So I'm having 60,000. Amanda did not have any salary. Ken did not have any salary. Talk of interest on capital. I'm having these figures here. Interest on capital, right? The one that I'm erasing. Interest on capital. Remember, I'm doing it that so that at least we should clearly see where our figures are coming from, right? Where our figures are coming from. So therefore, interest on capital, interest on capital, interest on capital, a bit squeeze. I'm having 20,000 for Lily, 20,000 for Lily, 17,500 for Ken, and 10,000 for 7,500 for Amanda, and 10,000 for Ken. Then share of profit, share of profit, share of profit, because we don't have any commission. You'll realize that whatever that I'm recording on the debit side as well, that we'll be recording on the credit side, is just what we had in our appropriation account. And that's a good thing with partnership. Once you master that, it will be very easy for us to always proceed. So share of profit, I'll be taking the figures that we have determined here. For Lily, I'm having 28,600, 28,600, 28,600. And for Ken, I'm having, of course, 14,300, 14,300, 14,300, 14,300. So once we have this, come to our debit side. Our debit side of our current account, believing that you still recall the details that should be entailed in our debit side, like drawings, interest on drawings, interest on drawings. We should be having it on the debit side. So therefore, mentioning that case, identify if we had any of these items. Like in our case here, did you have any drawings? Yes, of course, we had a drawings. And drawings for this case, we had for who and who. Drawings, if you can go in our trial balance, I'm having drawings, the last detail, drawings for Lily, 63,600, 63,600. For Amanda, I'm having 56,400. Whereas for Ken, I'm having dash. We don't have anything for Ken. Interest on drawings, we had already computed our interest on drawings here. Interest on drawings, we had 1,800 for Lily, recall interest on drawings, and 1,200 for Amanda. Ken, we did not have any interest on drawings. Once we have that, now things will be very easy for us. It will be upon us now to determine the balances of our current accounts. And therefore, to determine our balance of our current accounts, this is what you're supposed to do. So I'll just erase here now confidently, because the data that Mwalimu wanted already, we've picked them up. So therefore, we determine our balance breakdown. Balance breakdown can either be on either side. So balance carried down, it can either be on the debit or on the credit side. A balance carried down. So what will be our balance carried down here? We need to determine that. 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 So check for Lily. For Lily, we should be having how much? I need to add all these items. So I pick my calc. 8,200 plus 60,000 plus 20,000 plus 28,600. 116,800. 116,800. And what about this other side? Minus 63,600 minus 1,800. So therefore, on the credit side is more. So 116,800. 116,800. 116,800. And therefore, my balance carried down will be on the debit side. So I'm getting a figure of 51,400. 51,400. So therefore, this should give us 116,800. Amanda, 2,400 plus 17,500 plus 28,600 minus 56,400 minus 1,200. So therefore, that is to say that this side is more. This side is more. 56,400, the debit side is more, plus 1,200 to give us 57,600. And that is to say, my balance carried down will be on the credit side, which should be 56,400 plus 1,200 minus 2,400 minus 17,500 minus 28,600 to give us a figure of 9,100. So that the total should give us 57,600. Okay. Then what about on the for Ken? For Ken, in that case, I didn't have anything on the debit. So I'm having 10,000 plus 14,300, which should give us 24,300. So 24,300. And that is to say, I can close our accounts here. 24,300. So for Ken, I should be having balance carried down of 24,300. And actually, that is the data that you're going to require in preparing our statement of financial position. So once we have this data, it will be very key and very important for us now to proceed to prepare our statement of financial position. So that is what you are required to have. This is what you are required to have. So having that case, my good students, let's now proceed and prepare our statement of financial position to confirm if at all we've done everything right. Msema kweli, that is what they say, right? Msema kweli, statement of financial position. So one favor I want you guys to do for me is to mark this detail for me somewhere. These balances for current account. So I'll just pick them somewhere. Current account, I'm having for Lily L, I've determined 51,400 because I want to erase here. For Ken, or rather for Amanda, I'm having 9,100. That is a debit balance, so a negative. I'm having for Ken, K, 24,300. And maybe just to mention, you'll find that anytime I'm having it on the carry down, this is a debit balance. And why are you saying it's a debit balance? Because whenever I'll be operating my period balance brought down, you'll find that for Amanda, I'll be having a balance brought down on the debit side. And that's why you can hear Mwalimu saying that this is a debit balance. And that's why you hear Mwalimu saying that this is a debit balance. Because when I'll be opening my previous, or rather my next period, I'll be having a brought down on the debit side. And that's why you're saying it is a debit balance. It is a debit balance. What about the other items? The other items where I'm having a balance carried down on the debit side, you'll find that if you are to open our period, my balance brought down will be on the credit side. So therefore, these are credit balances, whereas this one is a debit balance. These are credit balance, whereas this one is a debit balance. A debit balance simply means that I'm owing I'm owing the farm, I'm owing the farm, I'm owing the farm. So once we have that case, I want us now to prepare our statement of financial position, and that will be now be very, very quickly. So therefore, allow me to erase here so that we prepare our statement of financial position, which will find that once we have the concepts always ready, or rather once you have the concepts at our fingertips, things are always very, very easy. And that's why I started by saying that at any given point, all this is always a matter of choice, right? Having a matter of choice, or rather being missing, is a matter of choice, because there are those who will choose to study to pass exams, and there are those who will choose to study to get the knowledge. So it's always a matter of choice. It's always a matter of choice. So mentioning that case, we come and prepare the statement of financial position for this partnership. So I'm having these individuals by their names. We had, of course, I'm having these persons, Lily, Amanda, and Ken. So Lily, Amanda, and Ken. Lily, Amanda, and Ken. Statement of financial position. Statement of financial position. Statement of financial position as at 31st December 2021. As always, having a format at the back of our mind, I'm having non-current assets, non-current assets. Talk about our cost, accumulated depreciation, as well as our net book value. Recall that currency is still very important, and in our case, we had our figures in 2000s, so I'm having my figures in 2000s here. I'm having my figures in 2000s. You're having our figures, of course, in 2000s. Okay, so we start with what I was given. So I'm going to share our question at that point, right? So having that case, we start with our assets. The first asset here I'm having land and buildings. So land and buildings. So the original costs I was having 1020, right? Accumulated depreciation. Recall we had computed the depreciation for this item. We had computed the depreciation for this item specifically for building. We are building, in that case, I believe we are determining a figure for much. I've erased mine. I believe you have yours, right? Still, I'm going to work it out very quickly. Land and buildings, I'm having accumulated depreciation brought forward. I was given a figure of 10,000, or rather 100,000. That is brought forward. Charge for the year, I was given 2.5% of 2.5% of for 20. 2.5% of for 20. 0.025 times for 20,000. In that case, I had 10,500. So if we total plus 100,000, that should give us a figure of 110,500. So I'm having 110,500 being accumulated depreciation as of that date. So that our net book value, I'm having 1020,000 minus answer to give us 909,500. Okay? Remember, this is what we had in our income statement. If you can confirm in your income statement, I believe this is what you are determining. Talk about the other asset here, which in this case we had plant and equipment. Plant and equipment, plant and equipment, plant and equipment. Cost, I was given a figure of how much for cost? 16,400. What about accumulated depreciation? Brought forward, we had a figure of 8,400. Charge for the year, I'll just do it with my calc quickly because we had already computed that. I'm having 16,400. I'm having 16,400 minus 8,400 times 0.15 to give me a figure of 1,200. So 8,400 plus 1,200, I'm having 9,600. So that is to say, we should be talking of 16,400 minus answer. Remember, don't wonder where Mwalimu is getting all these figures. We had already computed that. So it's just a matter of us picking it directly from our income statement. Only that Mwalimu income statement, I've erased my income statement, and that's why you'll find that I'm working it out again. But in your case, I believe you can be able to trace that because I believe you're writing. You're not just watching like a movie, right? So, having that case, we need to come up with a total. So therefore, this is what we should be having. I'm having now a figure of 1020,000 plus 16,400 to close this. 1036, 400, close it completely. 110,500 plus 9,600. 120, 100, we close it completely. Or about the net book value, 909,500 plus 6,800, I'm having 916,300. We have that. Then we proceed to our current assets. So having our current assets here, current assets, talk of our current assets. Current assets, we start with the order of liquidity. So I'm going to start with our inventory. Inventory, how much are we given? Of course, that was in note 1. Check note 1. Inventory, I was given a figure of how much? We're told that I'm having a figure of 148 for 20. 148, 420, right? Trade receivables. Trade receivables. Initially, I was given a figure of how much? Trade receivables in our income statement, or rather in our TB, I was given trade receivables, accounts receivables, 116,800, 116,800. But recall there was note number 4 where there were entries of credit sales which had not yet been recorded. So therefore we need to record it. So plus 6,000. We need to record it. We need to add the 6,000. We need to add 6,000. So plus 6,000 here. Plus 6,000. So just a moment here. Plus 6,000. We see what we will have. We see what we'll have. So I'm adding it there directly because recall that is, we are told that that figure initially was not recorded. So that's why we are adding it. So just a moment here. Okay. So I'm going to have a figure of how much? 116,800 plus 6,000 to give me a figure of 122,800. 122,800. Talk about any form of prepayments if we had. Did you have any prepayments, my good students? We didn't have any prepayments. Any bank, or rather cash, or bank balances? Yes, we had a bank balance. Bank balance. Bank balance, I'm having a figure of how much? 12 to 60. 12,260. So that as at the end of the day, if we sum it up, what will we be having as our current assets? Current assets, therefore, we should be talking of 148 for 20. We add 122,800. We add 12 to 60 to give me a figure of 283,480. So confidently, we can now have our current, or rather our total assets. So therefore, my total assets, we should be talking of plus 916,300. My total assets, I'm having 1,199,780. My total assets. Equity and liabilities. Equity and liabilities. Of course, this is partnership. This is partnership. So we're going to look at our capital accounts. We start with our capital accounts first of all. So I'm having capital accounts. Capital accounts for Lily, Amanda, and Ken. Pick the figure directly there. I'm having 400, 350, and 200, right? Capital account. 400, 350,000, as well as 200,000. What about our current accounts? Current accounts, still the same for Lily, Amanda, and Ken. That's why I mentioned that you should have written them somewhere. In my case, I had it somewhere, so that is where we are going to have it. Remember, I'd mentioned that you should have recorded it somewhere. So, mine, we had written 51,400, a negative of 9,100, and 24,300. Remember the one that you are determining in our current accounts, right? The one that you are determining in our current accounts. So that is what I should be talking about. That is what Mwalimu is taking. So that is to say, let us add all these items here. We add all these to give us our total equity here. To give us our total equity at this point. Total equity. Total equity. Total equity. Total equity. Total equity. Total equity. I'm going to take 400,000 plus 350,000, 400 plus 350 plus 200 plus 51,400 minus 9,100 plus 24,300. I'm getting a figure of 1 million. I'm getting a figure of 16,600, right? Then we consider any long-term liabilities. So long-term liabilities. Did you have any long-term liabilities in our case? Yes, we had. So sharing the question once again. Long-term liabilities, what did you have? So I'm having a figure of loan. Can you see loan there? I'm having a bank loan. I'm given a bank loan, a figure of how much for bank loan, 130,000. So I'm going to have a bank loan, 130,000. Bank loan, 130,000. Long-term liabilities, you're done. Top of current liabilities. Current liabilities. Like accruals, trade payables. Yeah, we had trade payables, right? Where I'm having accounts receivables and payables. So I'm having trade payables. I think we only had the one where trade payables, I'm given a figure 53,180. 53,180. So therefore, once we are done with that confidently, let us see msema kweli total equity and liabilities. So I'm having our total equity and liabilities, total equity and liabilities, where in that case we should be talking of from top there, total equity, which was 1,016,600 plus 130,000 plus 53,180 to give us a figure of 1,199,780. So you can clearly see that we've done everything correctly, and that is, it is a kind of satisfying our bookkeeping equation that our assets should be equal to equity, or rather capital, plus liabilities. Our assets should always be equal to capital plus liabilities, our bookkeeping equation. And that is what we are seeing here. Our total assets is totaling to our total equity and liability. So my good students, that is what you are required to do in this question of ours. So this was a partnership. Partnership without admission. Partnership without retirement. Plain partnership question. So in this case, in our next class, my good students, now we are going to introduce a concept whereby whenever I'm having admission or retirement, what will we be required to do? And that's a concept that I want us to introduce in our next class. To that point, guys, thank you so much, and let us meet in our next class. Thank you.